Hello traders, welcome back to the channel. As you guys can tell from the title, we are back with another weekly breakdown. It's been a couple of weeks since I've actually done one, and that is because, I haven't done as much trading as previous weeks, so there wasn't really enough content for the weekly breakdown. What I've been focusing on is improving the strategy. So then obviously if you're constantly improving, your results should constantly get better, and sometimes you got to take maybe some time out the markets. Well, obviously still trading the markets, but more time on, gathering the data, the stats, everything to improve your strategy, testing, and overall just improving your trading experience. So fairly good week in the markets, had some very frustrating trades. Bit of news this week as well, which did affect, the dollar, which, as you guys know, I mainly trade gold, AUDUSD and GBPJPY. So that is why it has affected me quite a lot with this week's trading. So as we always do, we are going to start on gold, probably my most traded pair, but this week I haven't traded it as much as previous weeks, just because what I've been testing has been working more on GU and AU, so that's what I've been focusing on. But gold is always there, and we always still love a bit of gold trading. So yeah, if you guys trade gold, then you'll know we had this very big bearish push from around, pretty much just under 2,000, and at the time it was just a massive drop, over 1,000 pips. So yeah, when you're trading like this, you don't really want to try and catch a falling knife and enter buys, but based on my analysis, based on everything that I've done in my trading, I knew that this was a very nice area to catch buys from. And if I actually get this up, as you guys can see, when price was up here at 18.98 even, won't be on the charts for a couple of hours as I was about to film my podcast. So if I know I'm not going to be on the charts, but there's a trade setup going, then what I'll do is I'll update the group in the areas I'm looking at. Even if I wasn't at the charts, you can see the entries there, the stop losses there, the TPs there. Look at this first level at 1908. I'm pretty sure that is 1908, 1909. All the levels are on there. So, you can look, okay, I agree with Will on this, you can take the trade. And yeah, cool to absolute perfection, as you'll see in a second. We need to hold 1890, which was this level down here. And 1900 and 1906 area could be tested and would be interesting if we get the long entries. And then if you look on the charts now, if I show you the entries which I actually marked up, was around this area here, with a 30 pip stop. And do you remember that area I had marked out? This area here, at that 1909, 1908, 50 area, boom. What did price do? Came into this area, pretty much minimal drawdown, and was filming the podcast, which you guys can check out on the channel. Hopefully going to do one weekly if I can get the guests on, or maybe just with mentorship members too, so you guys can see how they're evolving their trading also, for someone that's not actually like a public trader, because that might be quite interesting too. But as you see, minimal drawdown. If we actually look here, the drawdown was around 7 pips, and on gold with a 30 pip stop, only getting 7 pips drawdown is very good going. And this was like 5%, and I think I said full profit now taken at 1906.7, so 1906.7, that's around 4.7%. So if you got in on that trade and you're in the gold group, then lovely times. Obviously some people wouldn't have got in because it wasn't in the so-called signal format, even though technically there is no signal format because everyone does it differently. So it is what it is. But after that on gold, I wasn't really interested in trading it. If I just show you here, you can see that we had these periods where it was just consolidating, and then making a slow move. My personal trading is better when you have these big moves, you're getting in on the pullbacks and then catching another move. That's why I've been testing, to trade during these consolidation areas. Like this trade here, it's kind of during this consolidation, counter trend, but that's part of my plan. Some of my trades are actually like this, and it worked perfectly. We also, this was a limit which we actually cancelled. If I show you guys, you can see that 89% of people enjoy these little update videos, so I update people on the charts and everything like that. If you see in this video, if we play it along, you might not be able to hear it, but I had this entry here marked out. So this first entry was at 1896 even, and my first target is always like a 1 to 2. And if we actually go back on here, you can see that it literally tapped into the pip. Not enough time in the area to send a signal, because you've got to think, when price is in that area, my alert's been set off, perfect. I go to enter the trade myself, then you have to type it out, then you send it. I just didn't have time. I didn't want to make people miss the trade, ruin their risk reward by sending it, 5 minutes too late when it's already gone around 35 pips from the area. So that was annoying. That was a missed trade, and we would have hit the first target as well, so it is what it is. But then we had a 1896 sell limit, so that was at around this area. So we actually set it earlier in the week. There we go. And I think my target was like 1881 for a 1 to 5. And if you see, we had the sell limit. Then I said to cancel, because this is when we had that news. We had a weakened dollar, which gold against the dollar, technically it made gold go up. So cancelled the order, and glad I did. We still would have dropped into profit quite nicely to around just over 1% in profit with a sniper entry. But then obviously we followed, price actually followed the trend and then went to the upside. And the reason for this was literally when price came down here, we tapped into 75, rejected off 75, which is obviously a key psychological level on gold, and then we went to the upside. Once we did this, I was like, okay, we've kind of switched direction, and I wasn't really interested in getting into short positions in this sort of area. That's why I did actually cancel that one. And that is it for gold pretty much. Other pairs, GU, we had a very, very interesting situation. So very, very annoying, because I had a sell limit in this area up here. And I had 10 pip stops, like I always do on most forex pairs. And then I think my target was, I think it was a 1 to 9, 1 to 9.9 or something like that. That's quite a big trade for me. Almost a 1 to 10, if I remember correctly, something like that. Actually, no, my TP was 499. Must have had a smaller stop then, because I had a 1 to 10, pretty much. There we go. So that was the setup I actually had a limit for. If I post a screenshot here, you can see the limit didn't get tagged into. It was very, very painful. The account I'm currently trading, because I use like a copy trader, one of the accounts is $200,000. That would have been $20,000 missed. So, it is what it is. You're not going to get into every trade, but very, very annoying. It would have been an extra 10%. That one trade would have beat the past 2 weeks of profit wise. So, it is what it is. Might have been spread. Might have been, I put the number in wrong, but it looked like it was in the exact area. The spread wasn't too big at the time, so I don't really know why I didn't get tagged in. But price absolutely melted after that. It just got obliterated, so very, very annoying. But we did have another trade on GU, and I will post profits and screenshot there so you guys can see that. But we were looking in this area here to buy GU, and that is exactly what I did at this sort of area. We had a 10 pip stop. You guys can probably see a little theme here, the 10 pip stops, and we were targeting this wick here. It wasn't a session high or low wick, it was just a wick I was targeting, and that was a 1 to 3.78. Closed out up here before all this, because as you guys know, at 10 to 11 p.m. You do actually get that higher spread on forex pairs, so I didn't really want to hold through that, and we're pretty much at the target anyway. I know people are going to be like, oh, well, you didn't hold, could have had an extra 3 pips, 2 pips, but it's just like the overall that's going to add up. Obviously, if you do that on 10 trades, you lost 20 pips, that's 2%. So wouldn't usually close before the target, but in this certain situation, I actually did. And then price just literally didn't stop going to the upside. So we missed the 10%, closed out for around 3%. So yeah, happy with that one. Then also we had AU, the same sort of thing. If you see, it's pretty much the same situation. So again, looking to buy from this area, same sort of thing over there. That was a 1 to 3.3, so a slightly lower risk to reward, because yeah, pretty much same setup though, so I'm not going to go into that, but I am going to go into this setup here. AU, very, very annoying. So I had a sell in here, and we did actually have a little bit of news, which created this wick down and a push up. This push up, because we had that small news event, it was on the Friday, it was coming into like New York session. I was like, I'm just going to make this risk free. Never usually do it. Because we had that little bit of news, I actually did it. It tapped me out by, if price 0.3 pips away from my entry. Got taken out break even, and then if we go down, you can see what happened after. It just didn't stop selling off after that, which was very, very annoying. And we had, I think, 20 lots on that as well, so obviously risking 1% would have been a lot of money. But it is what it is. Not every trade, not every week is going to be absolutely perfect. That's just the reality of trading. And I'm going to try and show you guys what it's actually like. We didn't really have any big losses, but we missed out on a lot of profits, which is annoying. Also, the trade I actually just forgot about, but remembered it just now. I don't send signals when it's gold news, because obviously you can get manipulated, people over risk on signals, and that's why I just don't do it. It's not really worth it in my opinion, because when I'm trading gold news, I'm not going full risk anyway, and yeah, pretty much that's the reason. But I was in gold sell positions here. Price came down. Right as the news hit, I was up 9.5k. You'll see this in a video coming soon. And then boom, we got stopped out at break even. So we were up 4.5%, almost 5%, and then boom, hit break even. And because it was the news, I re-entered here on the sells, because I was thinking, okay, we've had this sort of fake out, now we're going to drop. Got stopped out, but then I got an entry right up here, which then, first trade we missed out on 9.5k profit. That went to break even. I think we made like $200. Second trade we lost $2,000, because that's obviously 1% of the account. And then the third trade we made $4,000. So overall, could have ended the day with more. Don't usually trade news, but it was just, it fit the plan. The trade was still valid because I had a level up here and I also had a level here. So I knew that if this level didn't hold, this one would hold. So that's why I still entered the second one, even after just taking a loss. It wasn't like revenge trading because the analysis was in place. When that trade was around 1.5% in profit, I made it risk free, as it was during a news event, and then we closed at around 2% profit for around $4,000. And it is what it is. It's gonna happen. You're gonna make mistakes in your trading, but that's the beauty of trading. You can make mistakes and overall still be profitable. You could even make no mistakes and be negative because of your psychology. You could be in a winning trade, but you only hold it half the way to your take profit. Then you have to lose half the trades as well to be profitable. So if that makes sense. So guys, I hope you guys did enjoy. More videos coming soon. Comment down below videos you want to see, and I'll catch you guys next time.